Our feeds are also focused, of course, on the White House, where we're about to learn rather more about the executive orders set to be signed by the president today. We'll keep you updated on what we hear. But first, a live look at the Dow this morning. It's down right now, slightly more than 300 points. The market's likely reacting to an early morning threat from the president and a fresh round of tariffs on goods not made here in the United States. Today's target, your iPhone. In a social media post, the president had this message for Apple's CEO Tim Cook. He says, quote, "I expect their iPhones sold in the United States to be manufactured and built in the United States, not India or any place else." He adds, if that is not the case, a tariff of at least 25% must be paid by Apple to the United States. White House officials say that President Trump and Cook met at the White House on Wednesday. Trump's latest announcement comes after he imposed sweeping tariffs in early April. Back then, he said high-tech products like the iPhone would be exempt. But keep in mind, Apple products are primarily manufactured in China. Analysts warn moving the production to the U.S. could add hundreds of dollars to the cost of devices. Now, we've got team coverage here tracking all of that for you, what it means for your wallet. And they join us now in moments. CBS News contributor JD Durkin at the New York Stock Exchange. But first, to CBS News senior White House correspondent Weijia Jiang. Weijia, good to see you today. What are we learning about this meeting between President Trump and Tim Cook? And what happened there? And what does it have anything to do with the latest announcement?
Well, so far, we just confirmed that the meeting happened here at the White House on Wednesday. And obviously, this is an ongoing relationship. It's not surprising that Tim Cook would be here. And it's not really surprising that the president would rail against Apple today because he has publicly expressed his frustrations with Apple, and he has made clear that he believes they are making too many things, too many gadgets in China. So recently the president suggested that Apple do more manufacturing in India, as we saw today. Now he wants to make more products in the U.S., which is a lot easier said than done. So what's important to remember every time we hear the president talking about tariffs and trade is that his statements are not necessarily literally what he means, but he uses these things as negotiating tools to put more pressure on companies, and in this case, not only Apple, but China, as they are trying to work out a new trade agreement with Beijing.
And this wasn't the only tariff announcement the president made this morning. What else did he have to say?
Yeah, he also called out the European Union, and we're getting a little more context about why. The president said that he wanted to put a straight 50% tariff on the EU, and shortly after that, we heard from the Treasury Secretary, Scott Bessent, who said that the president seems to be frustrated with the pace at which those talks are going with the EU, which is a significant trading partner with the U.S. He also said that things are not on pace as they are with other major trading partners. And so that tweet, or that post on X, I should say, dating myself to Twitter, is a reflection of the frustration that the president feels. So it's to be expected, because when the president tweets things like he did today, typically they are in response to a growing frustration that happened and triggered him behind the scenes.
Yeah. All right, Weijia, please stick around for us, because we want to come back to you soon for more information on other stories today. But let's go now to CBS News contributor JD Durkin. JD, good to see you. Happy Friday to you. How will this announcement directly affect consumers?
Well, Mugo, I should say it was expected to be a pretty happy Friday here on Wall Street. That is, of course, until a series of those posts from the president, like Weijia was indicating there a moment ago, in the 7 o'clock hour, really threw the trading day very much on its head, both for the broader market as well as for Apple. But let's start with the later here, because this is without a doubt, and has been for quite some time, arguably the most important company in the entire world. It's got the third largest market cap. It accounts for 5.5% of the entire stock market by itself. As Apple stock moves, Mugo, largely so too does the market. But given this frustration, which is perhaps a bit of a fraying of the relationship between President Trump and Apple CEO Tim Cook, we are seeing significant downward pressure on the shares, which are currently trading down about 2.5%. It's the lowest level we've seen Apple stock trade over the course of the last few weeks. One very well-known analyst here on Wall Street, Dan Ives from Wedbush Securities, is very fond of saying that Tim Cook is 90% CEO, 10% politician. We know there's a long-standing relationship between the president and Tim Cook, but clearly the president is a little frustrated with recently announced plans from Apple to invest more than $1 billion into a new Foxconn plant in India. Obviously, the administration would like to see that investment here stateside instead.
Yeah, of course, but certainly seems like this uncertainty never ends. JD, just how long would it take for Apple users to feel and see this change when they head to the stores?
It's really the $1 million question for any of these big retailers, people in the software or hardware space. What's important to take into account is the existing inventory. And analysts believe right now, Apple really has enough runway or enough inventory to last at least 3 months or so, anywhere between 6 weeks and 12 weeks. The challenge is what comes after those 3 months. In other words, if you go to the Apple store right now, you buy yourself a new iPhone or a new MacBook, the price is not going to be reflective of what happened Liberation Day because Apple has had that existing inventory at place. The big question is what happens later on this summer once you push into the fall. If this existing tariff policy stays as elevated as it is right now, according to the president's social media post, Apple may be in the unenviable, very difficult position that a lot of publicly traded companies find themselves in. And they ask themselves the question, do we absorb this cost or are we forced to pass it down to the consumer? That analyst I talked about there a moment ago, Dan Ives, consider this for perspective. He's very fond of saying, if you like your $1,000 iPhone, it's got to be made in China. If you want to produce the iPhone in Secaucus, New Jersey, it'll be anywhere between $3,000 and $4,000. That shows you just how important the global supply chain really is to make these electronics and actually get them to our door here in the U.S.
Yeah, and I cannot imagine spending $3,000 to $4,000 on an iPhone. That would be insane. JD, another question for you here, because there's this announcement about 50% tariffs on the EU. We wanted to get your reaction to that.
Well, I think it's really caught many people here on Wall Street very flat-footed, but it really shows perhaps a bit of a deterioration in the ongoing talks and negotiations between the Trump White House and the president's EU counterparts. Everyone here on Wall Street's been very acutely aware that the White House needs to make tremendous strides to ease a lot of these tariff burdens, but we were really caught off guard with that tweet that was sent out, or rather that post on Truth Social, on the EU. That went out at 7:43 this morning, and immediately we saw the reaction in pre-market data. We saw the S&P 500, the Dow 30, as well as the tech-heavy NASDAQ all turn negative sharply. As you and I are having this conversation shortly after 11 o'clock here on the East Coast, the S&P 500 is down about 1%. And so we'll have to see what investors have in store. But clearly, not a lot of people expecting that type of missive from the president. People here on Wall Street want to see an easing of tariff tensions, not a ratcheting up.
Yeah, that certainly came out of nowhere. JD Durkin at the New York Stock Exchange for us on this Friday. Thank you so much for joining us on 24/7.